I buy notes at a discount, but I buy them with money that I don't need producing cash flow. Twelve reasons why mortgage notes are appealing to investors. Number one, they're relatively easy to manage, and I'm going to talk more about this. They offer versatility with exit strategies that are greater than the exit strategies that exist when you own real property. Now, I want you guys to make sure you're taking copious notes here tonight because I'm going to give you a lot of stuff. There's a lot of meat in this presentation. But I'm going to show you the benefits of mortgage note investing as opposed to property investing. Again, thank you. Full disclosure, I own real estate, I own mortgage notes, I own first deeds of trust, I own second deeds of trust, I own judgment liens, I own tax liens. I buy a lot of these types of alternative investment strategies or these alternative investment opportunities, often doing it through my self-directed IRA, doing it through my whole life plans, if you guys know anything about whole life investing, but we're going to cover as much of that as we can. I don't recommend investing in any note that is not secured by real property. I also don't investing in second liens or junior liens that are secured against real property unless you really know what you're doing. As long as you're in a first position, you know you're in first, you've got title insurance for first position, there's really not a lot of surprises that you should encounter as a result of the investment, okay? This will allow you to escape the day-to-day volatility of the stock market. Now, I don't know about you guys, but I have never been a aggressive stock investor. Now, I do participate in our company's 401k here, but I only have one experience where I personally directly invested in a stock. And I remember it distinctly. It was May of 2012 or 2013. And it was when Facebook was coming out with their IPO. So this is what, 10, 11 years ago? And the IPO was slated to come out at $28 or $29 or $30, somewhere right in that range. And my wife and I were traveling. So we were living up here, but we had traveled down to Las Vegas. We were driving up to Salt Lake City and we're hearing this on the radio. And I said, man, we got to buy some of this Facebook stock. And so I called my advisor and I'm like, hey, I want to buy Facebook stock. And so we bought more stock than I've ever bought in anything ever before. And for the next 90 days, I was a nervous wreck. Now, I should have consulted somebody because one, guys, IPOs, they get really, they rise very quickly because there's so much, excitement and enthusiasm around the IPO, and then they fall very quickly. So I bought a bunch of this stuff at I want to say it was $37. And then within 90 days, it was at 17. And I'm thinking, you idiot. You should have stuck with real estate and mortgage note investing because you clearly get that. What are you thinking getting into the stock business? Well, you know what stock traders always tell you, it's only a loss if you sell. So just hold out, stay in it longer, and the market will bail you out. Well, they weren't wrong. It took 2 years for the market to bail me out, but I was transfixed on needing to know, what is the stock doing? I'm sitting in church checking the stock ticker on a Sunday. It doesn't even move on a Sunday. It was causing me a lot of stress and I didn't like it. And so my wife and I chatted and we said, okay, here's what we're gonna do. It's going back up again. When it gets to like $56 or $58 where we double our money, we're gonna sell it. And that's what we did. That was another mistake that we made. What's Facebook trading at today? Like 300? So had I stayed in it, we could have seen 1,000% increase, but we sold it and I don't regret it. And admittedly, I've not bought any stocks since outside of my 401k through the company, through our advisor. So if you're here for stock advice, I'm not your guy. But what I do want to talk to you about is having a diversified portfolio where I know many of you participate in your company 401k, you've got stocks, there's nothing wrong with that. But if that's where the bulk of your assets are, that's where the bulk of your income is stuck, I'm hoping that I can encourage you to get some of that placed in an alternative, doing something different in a different place. And that means we don't have to deal with the volatility of the stock market, and that's what we're driving towards. It can and often does offer a larger, even sometimes a quicker return than any other type of investment, including flipping real estate. Flipping real estate is a long process. If you're going to buy a house that's run down, go in, fix it up, clean it up. You've got the timeline of contractors and permits and local municipalities and labor forces. Then you've got to list it, you got to put on the market. And with rising inventory levels, it's going to take you statistically longer to sell that property now in the market that we're currently in than the market we're coming out of. Whereas if we just hold the note, we're not so much concerned with markets because the note rate is fixed. And the person that we lend that money to is going to have to make that monthly payment every single month, regardless of what's going on with rates, regardless of the volatility of the market, regardless of whether or not they can sell it or not. They have to pay. This is why, you guys, it's one of the biggest reasons why banks do not invest in real estate. I mean, think about that. You know, if real estate investing is such an amazing opportunity, how come the banks don't do it? Because they realize that investing in real estate is logistically a lot of work. Where if we just lend to the people that are doing the real estate investing, we can just sit back and collect our monthly payments. So if the banks who house the biggest, most beautiful buildings in the world are doing mortgage note investing, probably means you and I should be doing it as well. Again, we talked about diversifying your portfolio. The other thing I love about notes is we don't own the property. So there is no property management. There is no screening tenants. There is no 2 a.m. phone calls because the toilet won't flush or the pipes are bursting. Now, again, I own rentals, okay? I have a lot of rentals. I'm not anti-rental, but I'm also not all rentals either, okay? So some rentals, some notes, some stock, some crypto if you like that. I'm not a fan, but I know some of you are, that's okay. But this allows the opportunity to earn additional passive income for you. You can target high yield returns. You can do it through your self-directed IRA. You can leverage to do this through your self-directed IRA, which provides an opportunity for socially responsible investing. And it allows you to purchase notes that are already cash flowing. Discounted notes are a terrible investment. Now you'll notice that I put that statement in asterisks because I know that I'm going to get a lot of pushback from my note investors who believe that buying discounted notes is the only way to go. Now, again, full disclosure, I buy notes at a discount, but I buy them with money that I don't need producing cash flow.